Welcome back to the Eric Krown Crypto channel. Wishing you a happy and healthy start to this nice macro Sunday morning over here as we get prepared for the next few months to come. Elsa's coughing in the background because she's getting over a sickness, but you know what? The show must go on, and we actually do have a lot of new things to be speaking about today. With that said, because it is a macro Sunday, we're actually not going to be speaking about anything in the short-term timeframes. Basically, I could just as easily look for Bitcoin to come back down to 20,000 bucks as I could in the short term look for it to come up to 23,500 bucks. But the big focus, the big setup is really on the next few months to come. So with that in mind, I think I should once again announce the sale. Yes, we still have a sale going on right now. Another 4 days left in it. Of course, with any one of the programs that you might be interested in, I would strongly suggest to watch the promotional videos, especially for the TA program or the options program. These are very long programs, so there's a big time commitment and also big financial commitment as well. So make sure that you know what you're getting yourself into and whether it's a good fit or not for yourself. Other than that, I think we can now rock and roll into it. I want to first start off with this chart over here that we've been following, and that we'll actually continue to follow, and that is the Pi cycle low indicator. Now, with that said, this particular indicator has been actually very, very good at getting all of the prior macro cycle highs for Bitcoin, and the macro cycle lows have actually worked, pretty decently thus far as well. Now, this is something that I actually discounted last year, even though covering it in April and May, calling the high right here. And yes, Bitcoin did trade, a decent amount above that high, but ultimately that was certainly a good selling point in hindsight. It is, of course, 2020. But the thing is that long term, it's been rather consistent, I would say. And with the low of this indicator as well being, perfect for the iterations that we do have, which is really only 2 on the chart. So that is not a trend, to be 100% clear. It's not very well tested, I would say, if you want a good counterpoint for that. And I'd say that's very legitimate in this case, but it's something that I'm certainly keeping an eye on right here. And you could make the argument that, yes, I called 3 macro cycle lows. The problem is that back on over here in 2011, it didn't have enough price action history in order to really, fully populate the signal. So what is the signal, and why am I bringing it up right now? Well, the signal is when the green and yellow moving average cross the red moving average right here. That essentially marks off the macro cycle low. So you can see this back on over in 2015 January, pretty much getting exactly on the low. It actually happened 1 week before, to be fair. And then on the close of a closure, yeah, that actually did mark the cycle low. So fair enough. Perhaps that actually is fully correct in that case. And then, of course, in 2018, same thing. Crosses all at the same time, basically, in this case. This one actually looking, somewhat similar to our current low thus far, as long as, especially like $19,700 or $20,000 does hold, which is why I do say that, think could very easily come back down there. I don't really have strong opinions on that, especially over a weekend. We'll get to that tomorrow as far as a topic. But ultimately, in this case, the Pi cycle low, once again got it actually to the tick, I do believe, yes, in 2018 December. And so the reason why I'm bringing it up right now is because we're seeing these moving averages draw incredibly close to each other. Very, 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 very close, as you can see on the weekly. In fact, we should actually go down, use a magnifying glass, and get on the daily right here. And when in doubt, pull it out, as the good old saying goes. And that's kind of what I'm doing right now. It's a little bit convoluted, so that's why I'm stretching out like this, which makes it look a little bit further away. But in this case, if I were to kind of take my pen my pen 15 and draw these like proverbial lines, and kind of get an idea of when they likely do cross, assuming that everything kind of stays consistent right here, then we're probably looking at this week actually. Before I was saying the next 10 to 14 days, I think I would actually make that more, I'd make that more like 7 to 10 days actually, as these are drawing pretty close together at a rapid pace. So, if and when that does happen, will that mark off the next macro cycle low or the Pi cycle low, as the indicator does suggest? Well, something to maybe consider amongst other things. So I want to now present the picture with that alongside some other things. Keep in mind though, even like, let's say best case scenario, that is the macro cycle low, which I actually do not think that it'll be. I do think that Bitcoin will trade lower over time, but maybe not that much lower. But if that does happen, Bitcoin can still pull back, as you saw back on over here. In 2018, for example, while the Pi cycle low did actually call the low, price actually did come back down and test reasonably close to that low. And kind of a similar setup over here as far as the structure goes thus far. We have range highs, obviously, in this area at about 4,300. And then we got our lows right here. And then basically Bitcoin got a higher low after a double rejection at the range highs. And as of right now, we kind of have that first 1-2 low right here. You know, just come back down, maybe set another higher low, and then bust on through the $23.5 level. That would be rather powerful. But for right now, you know, that's just kind of a potential. Anyways, moving on, I want to kind of build up the case for a likely bounce out of this range first before potentially going lower later. And that's what makes this whole thing so difficult to kind of convey, simply because, you know, most people just want like full on bull or full on bear. It's like, it's either bull Jesus or bear Jesus. And if you don't believe, then fuck you. Well, where's Trader Jesus? Where art thou, Trader Jesus? Take the wheel. Surely it's more nuanced than such black and white thinking like that. No, that's what get the YouTube likes. So we'll just continue to hammer on that. Just kidding. Anyway, so this is another indicator. I don't think I've spoken about it too much on this channel. I've actually brought it up on more on other channels, but this is the PMARP weekly mean reversion plays that I've been looking at. And basically, what is the signal? Well, first I should explain the PMARP. The PMARP is basically an indicator that tells you how far away the current price action is from whatever moving average you're looking at over a look back period, and then ranks it into a percentile format. Anyways, the way that it works is that anytime that we've seen the weekly PMARP get below this green horizontal bar that my cursor is currently on, I've marked off all of the iterations of that in the past history for Bitcoin, going all the way back to the genesis, actually. So how many iterations are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 12 not including the current one that we're on right now, and found that on average we've seen some pretty impressive bounces off those levels, some of them even being macro cycle lows, but certainly not always, as you might guess. But the historical reversion has been about 59%, and the days for that to play out has been on average just over 53 days, or about 53 and a half days. So in that case, that would kind of give us like a 2.5 month span here, starting from basically the middle of June. So that would put us, I guess, around like September. I don't really know my months, or maybe end of September, something like that. And so if we were to play around with numbers and kind of see what 59% would look like, keep it in mind that there's actually a lot less variance on this particular one compared to a lot of the other calculations I've been giving out. It definitely seems like, to give you an insight, what's the lowest we've seen on this? 44%, I believe. And a lot of the iterations have been actually in the 50s. So I do think that that's actually an accurate gauge, at least historically speaking. Again, we're talking about statistics, not perfection here. And so what would it look like from our current low, that being 17,500? Well, 59%, basically 60%, puts Bitcoin still not into the $30,000 territory. And I kind of stick with what I've been saying long term. I do not think that Bitcoin's going to be seeing $30,000 anytime soon. But in this case right here, 59% about puts you at just below $28,000. I would think that that's a best case scenario. Personally speaking, I do think that short-term upside, and when I say short-term relative to the macro over the next couple months, I think it's kind of limited towards $25,000, which from our current low would still be a 50% move, almost 47.5%. So we're really not talking about a humongous amount of difference right there. That'd be reasonable, and would still be. Yeah, that'd still be even above like the worst iteration just yet, which was about 44%. This one over here that we saw more recently in January, by the way, was 46.69%. Also definitely on the lower side, but a lot more of those have been consistent, I would say, for the next high. So with that in mind, as we move on here, I want to get into this chart as well. This is another chart that we spoke about for the first time yesterday because it was going to be confirmed, or potentially confirmed as of last night's closure, and it did. And what do we see? We see the 5-day stochastic momentum oscillator has officially crossed the upside for the first time in a long time, and will be remaining with upside posturing as long as Bitcoin's above 19,100. Here's the catch, though. The HVP of stochastic volatility is very obviously corrective right here. So this is very unlikely to be a reversal signal, at least in my opinion or in my experience. And I would say like best case scenarios that we come back up and maybe test somewhere around this trend line, which guess where that is? Right at the edge of the bullish control zone, which would be a great place to fucking reject if you want to continue on to the downside more long term. But we're just going to ignore that for right now. And what we're going to talk about all the other times that we've seen the 5-day stochastic momentum get down to that green horizontal bar, which we're currently bouncing off of right now. Might even, swing back down for maybe one more try lower, but ultimately very likely bounce off this region, historically speaking. And there has been 1, 2, 3, 4, 5, 6 prior iterations in Bitcoin's history. And the average bounce off those, historically speaking, has been about 58.25%. Very, very consistent with what we saw on the PMARP indicator. And these are completely different things. PMARP is like a statistics and moving average kind of base. It's kind of like a volatility based indicator, and then ranked into statistics. And then of course we got the stochastic momentum oscillator here, which is a stochastic, like that's a momentum oscillator, obviously. So two different things coming out from completely different angles, getting, similar results, if you will. Now, I did omit one of the results here from the first iteration back in November 2011 because it was an outlier. 258% is like massively overstated amongst any of the other prior historical iterations. So I figured that was not a good one to keep in. And then the average time for those bounces to play out to the next major high was just over 29 days, so about a month. So again, those numbers are going to be more or less the same. So kind of good to corroborate that story a little bit more, I do believe. And then if we want to take it maybe one step further, or do we want to take it one step further? Or maybe that's good enough for that as it is. Well, yeah, we can talk about the 5-day jewel. Yeah, because this is all some new that we spoke about yesterday for the first time. And yes, it did confirm. Well, you technically want to see one more close, to be fair, but the 5-day jewel, couple things about this. First and foremost, we have only ever once in the prior history of Bitcoin seen the God mode indicator. This is the green background that you see in the back there. One other time in Bitcoin's history, and that was actually December 2018. That was the prior macro cycle low for the past cycle. Other than that, we've never actually seen it even print that green. So again, it's, fairly untested, I would say, but it's definitely a more good sign than bad sign, obviously, but it's just hard to really do much with it when you don't have too much historical results with it. And then also of significant interest here is that we do see the oscillator itself has turned white, which does suggest that the overwhelming majority of the downside move is over for now. The volatility is essentially contracting into this, which means that your momentous move is ending. And if we do measure out the times when we have seen this one hit this green horizontal bar as well, just kind of being in these extremes, it's only happened 1, 2, 3, 4 times. Sorry, 1, 2, 3, 4, 5 times in Bitcoin's history. So kind of comparable to the other signals as well. I did not measure these out because I did not find a good way to do it that was consistent. But in this case, these have been at minimum pretty nice bounces. For example, the last time we saw it kind of within this region, even and it was actually even a little bit higher, to be fair, was back over on the bounce in late January, which was a nice bounce, to be fair. I mean, it did kind of chop around here a lot, but that was from like basically 35 all the way to 48. So that's a 36% bounce almost. On top of that, it was max cycle low over here, and another bull trap over here. Kind of similar to 2014, 2015, if I give my personal opinion, just because like that first one, trap, same thing that you got over here. Second one, maybe a major low. And again, these ones take like a long time for it to turn around after that as well. And then of course, back in 2011, you will notice that price action actually retested the lows, did not close lower than them on the wick. And so that one did eventually turn around and was a macro cycle low as well. So 3 out of the 5 past iterations have actually been macro cycle lows. I thought that was just a little bit interesting. You may or may not as well. So what else do we have that we want to present here? Well, the rest of it is going to be me brainwashing you, waterboarding you with some pretty nasty things long term. So let's get to it, baby. Let's fucking get to it, huh? So this chart, I always bring it back on over here. It's a great chart. It just fucking works, and that's what I care about the most. And it is the accumulation distribution indicator chart. Look, we've never not once ever seen a Bitcoin macro cycle low without the indicator itself getting down to this green horizontal bar. You can backtest yourself, and you can just very quickly and easily see on this chart here that there has never been a low without that area being tested, represented by the green vertical bars. And what I've done is I've actually drawn a regression between all of these lows, just kind of like a best fits, not perfect obviously, and kind of seeing where this intersects that green line. And that would suggest, potentially around like October actually, that it does get hit. So again, we've never seen a macro cycle low without getting down around there. And then also what I thought was interesting is that what I've done is is I've taken the time when the indicator itself turns red and then measured to the next macro cycle low, and found that the average correction from it turning red down to like the next macro cycle low was about 61.34%, which if we were to, take from this current iteration over here, that would put Bitcoin down around about $15,500, which is also rather interesting because that would basically be around the 0.5 Fibonacci retracement right here. And I do think that that's kind of like a best case scenario for like a macro cycle low. Most likely. My real thoughts, if I'm just giving you like, look, the people who are listening to this content at this point, like you already get it. Like you're putting the fucking effort. You're here during basically the dead times. I'll just shoot you straight. Look, Bitcoin it either bottoms basically kind of where we're at right now, maybe a little bit lower, like 15 or 16,000 bucks, maybe, something like that, and grinds it out for like the next half year. If you see something like that, that is extremely fucking good. Best case scenario, in my opinion. If that does give way, I highly doubt you're going to see a bottom at like 10,000, 12,000, whatever the fuck these numbers that people keep on parroting. It's going to be like 5,000 or 6,000. It's going to be fucking devastating. I'll tell you why, or I'll tell you exactly why I would be thinking that. And well, amongst other things, it's just simply this actually. Fucking dumb. Yeah, it always comes back to this chart over here. We are about to witness this. We are witnessing, probably the beginning of the first, I mean, it's not the beginning, but we're witnessing like the first real bear market since when? You could say like the early 2000s. I would say the 70s was like the last real macro bear market. Well, yeah, you could definitely say the 2000s and the 2008 actually. The 70s, and then of course you got the 30s as well. These are like the real nasty bear markets that traditional markets have seen, and obviously Bitcoin correlated with traditional markets because we're in a liquidity bubble right now, and we're kind of unraveling that. Would make sense to me that we probably come down and come reasonably close to the lows of March 2020, the old Rona dump, right? And keep in mind, what was the whole mentality of what happened there? Well, the Fed basically printed in order to avoid the R word, the recession. And what did that do? It doesn't like avoid it, just kicks the can down the road. And so now I think that we're starting to kind of deal with this. And for what it's worth, here's the crazy thing about this. Despite all this downside pressure that we've seen in the last 6 months, we're still nowhere fucking near where things were in March 2020. And to me, it'd be completely reasonable to say that, yeah, why, like, sure, things could come down there. I mean, like from where we're at right now to the actual lows of March 2020, that's still, it's like a fucking 43.5% move. And Bitcoin trades in a higher beta fashion to that. So probably at least like 50, 60% at that point. It's like, how high does Bitcoin get before then, or does it even really matter? At that point, probably looking like somewhere around 6,000 bucks if that were to play out. So what sort of indications do we have that suggest that might be likely to play out? Well, for one, we have 1, 2 drives, or actually 1, 2, 3 drives of bearish divergence on the quarterly chart right here. It doesn't happen too often. We've already almost played out the easy move of that, but even that hasn't been hit, and that'd be 34.70 or so. And then the major target would be the 55, which is like 26.55. Like, again, it's not happening anytime soon. This would be like the next year or two, I'd imagine. 6-month chart, of course, what are we looking like right here? Well, we have a bearish engulfing dildo that, doesn't happen all that often. In fact, the only other times that it has happened is when? Not even in the 2000s, by the way. It happened over here in the 1970s. And again, correction all the way down to the 55, and also bearish divergence the whole way through, which by the way we have as well. And then of course, same thing in the 30s, which was the Great Depression, and bearish engulfing. That's actually how it got started right here. So great history to align with that. And yes, do we have bearish divergence here? Yep, highs in the 2000s versus the highs right here in 2021. I'd say that does account for that as well. On top of that, when we go look at Dixie, I do think that we're getting ready for a short-term pullback relatively soon here at about 110. I had a target of about 120 over the next couple of years based off the breakout that we saw like half a year to a year ago. I guess this was like back when over here. So this was last year, I guess. That's happening even faster than I would have guessed. We're seeing the lowest BBWP reads on 6-month volatility like ever. We're seeing a Joule 6-month signal about to populate itself. I mean, it's pretty fucking crazy, man. In hidden bullish evidence, which, the easy part of that move is already played out, obviously, on the quarterly. But ultimately, 120 is certainly not out of the question. And it's like, at that point, the reversal is just like, it's just kind of getting, underway at that point. If we go into like a true uptrend here, I mean, that's probably going to, it wouldn't be out of the question to see like 130s in the next few years, depending upon how crazy things get. So it's like, what sort of geopolitical macro situations are we going to be looking at if that were to happen? I don't want to fucking think about it, man, because, that would, I guess, imply like World War III and then a changing of world orders. And then maybe, I don't know, China becomes like the world leader. And so everyone uses their currency as like the dominant currency to save in, blah, 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 blah. These are things that are way above my head and stuff that I don't even like have any qualification to talk about at all whatsoever. But, obviously something's afoot here, if you will. And you also see a Krown. Oh my God. Now that I recognize it, you basically have nearly a perfect Krown cross on the fucking 6-month chart. Now, I've never back tested on a 6-month chart, nor do I ever really look at them, but low BBWP, got the cross right there. Got hidden bullish evidence the whole way through. I mean, this is just like probably going up, man. Probably going up. Again, there will be pullbacks along the way, probably relatively soon, somewhere around $1.10, which we, might as well, for all intents and purposes, already be at. And then, of course, we got the tether dominance to look at as well, which has a more direct correlation to Bitcoin as they typically play against each other. And this is like that's not bearish. I still think that it probably gives one more try up around the intended target based off of our ascending triangle that we had back on over here. This was like back in May, April that I believe we started to call this and say, hey, this is like likely to happen. And same thing basically, but I do think that this move is actually coming to an end relatively soon. BBWP on the monthly is like, you've almost never seen it that high before, and then also kind of hitting the intended target. It's going to be close enough as well. So, maybe one more spike up into there. Who knows where that brings Bitcoin down towards? I have no fucking clue. And then, probably comes down after that. And in the shorter term timeframes, I do think that it comes down. It has another downside move shorter term actually as well. So that probably does help out a short-term bounce continuation for Bitcoin. That's kind of my personal opinion. So probably bounce first, come back down later, see how low it goes. Hopefully no lower than like 15,000 in my opinion. Below there is where I think catastrophe happens. I think 10,000, 12,000, 8,000 are just all meaningless. I understand where people are getting this from, but I just do not think that things are going to fucking bottom there. I think it's coming all the way down, wiping out the Rona buyers, and putting some pressure on the true OGs. Anyways, other than that, I think it's time for me to sign off. I'll let you marinate on those thoughts. Of course, this is all just my opinion anyways, hopefully based off of tangible things that I can convey to you, and then you can make the proper decision for yourself, what is relevant and what is not. And with that said, I wish you well as always. I forgot to shill Bybit because, well, fuck it. And my Instagram as well. I've been doing some Instagram updates. There is a link description below, of course, and then Bybit as well has their lovely promotion going on where you don't pay any maker fees, meaning no fees on limit orders, assuming that you get filled off a market. And there is a link in the description below as well for that. And once you actually like get it, then it's 30 days of that. I believe. So with that in mind, I'll be wishing you well yet again. Take care and see you hopefully soon.